Hi, my name is Cory Lashbrook, and I'm a management major.
My name is Jason Martinez, and I'm a sports marketing major.
And my name is Ethan Crass, and I'm also a management major. The purpose of the Spring 2017 Stock-Trak Investment Challenge was to familiarize students with buying, selling, and trading on the stock market. They were tasked with creating their own investment philosophy, learning from their mistakes, and attempting to finish the challenge in the green. Students were given free rein as to how they wanted to approach the challenge. The only restrictions were the $100,000 initial balance fund and the limit of 200 total transactions throughout the challenge. We were able to invest in stocks, mutual funds, and ETFs. The official trading period began on February 13, 2017, and it reached its conclusion 2 months later on April 14, 2017. The groups were given resources to analyze, understand, and choose stocks in which they wanted to invest in. At the end of the guide, we were to come up with a portfolio evaluation of what we invested in, how we invested, and then to do graphs and Excel charts in order to put it in a portfolio report.
So our group philosophy from the very beginning of the challenge was to be very, very conservative due to the fact that none of us have any experience whatsoever in the stock market. So we decided to manage risk by investing in stocks with low betas, preferably under 1.0, and taking long positions in ETFs that returned a rate comparative to the market as a whole. As individuals, none of us are big risk takers, and the challenge was no exception to that. So we decided that whenever we purchased stocks, we would hold them for as long as possible, no matter how well or badly they were doing.
For this game, our goals were as much about making profit as creating a diverse portfolio. To do this, we wanted to diversify in different sectors of the market, including investing in ETFs, energy and utilities, telecommunications, insurance, consumer goods, and manufacturing. Some of the standouts in each of these were SPY, which is a SPDR ETF, Consolidated Edison, an energy and utility company, and AT&T, a telecommunications company. The reason we invested in these companies is because they had a low beta, and we felt that they were less risk than the market as a whole. Overall, our effort to diversify was twofold. We broke our $100,000 allotment into 10 sections and basically invested in $10,000 segments. We also broke the industries into their different sectors and tried to diversify based upon that. So we had adequate amount of each industry, and we weren't over leveraged in any one particular area. Of our stocks that we invested in, one that was a standout was Radiant Logistics, and it returned 76% over the 2 months that we owned it. By incurring a relatively low risk, our goal was to have about a 3% return on our investment by the end of the Stock-Trak game. We began with an initial cash balance of $100,000, and we ended with a cash balance of $99,107, a loss of 0.89%. It's not too bad. It's not great. We had at certain points in the game about a 2 to 3% increase, our target rate of return, but fluctuations in the market near the end of the Stock-Trak game caused a drop-off.
Over the course of this semester, we were able to learn about the stock market. During our time investing, we went in with the strategy to be conservative, and we accomplished that. We were often second-guessing ourselves, wondering if we should sell our positions or hold them for longer. In the long run, we hurt ourselves by holding our positions for too long. Most of our stocks experienced gains throughout the duration of the challenge. However, we shot ourselves in the foot by holding them for too long. By doing that, our positions subsequently lost the value they had gained and had further dropped under the price in which we purchased them from. We learned that the stock market is a very difficult thing to predict. There are many outside factors that contribute to a stock's price. We learned how risky the stock market can be from observing other teams, as well as how safe it can be in regards to our stock's performances. If we did this challenge again, we would not be as conservative as we were. In hindsight, we were much too conservative and should have sold off our positions much more frequently. We were worried that being too active would hurt us in the long run. Instead, we were too comfortable and ended up losing money in the end. We would also purchase larger shares of stocks. We were very unsure and apprehensive when it came to deciding how many stocks to purchase. We purchased as little as 10 stocks to as many as 100. We feel that we should have been much more aggressive. Our reasoning behind purchasing so little stocks is simply due to the fact that we were unsure and did not want to get burnt in the event of a stock tanking and losing money, like Snapchat did to a lot of teams at the end of this assignment. Understand and choose stocks in which they wanted to invest in. At the end of the guide, we were... What?
Cracking up. You're doing great.